Hello guys and welcome to Hartman Traders. In this video I'm going to be showing to you what are the main things that causes the downfall of the stock market. Now there are many of the things that causes the downfall of the stock market, like currency, inflation, economic growth, unemployment, interest rates, etc. and so on, which affect the overall performance of the stock market or certain stocks. Now out of these I'll be explaining to you guys some of the things that the basic things that affect the macroeconomic things that affect the overall performance of the stock market. Now these things are, one of which is inflation. Yes, inflation mm, unexpectedly rise in a country, or expectedly or unexpectedly rise in the country, the consumers and the buyers generally they cut off their spending. They focus on saving more money to pass the inflation or to go ahead of the inflation. So so for this, in these cases, the consumers generally, when they cut off their spending, they usually do not invest in the stock market, which results in the decrease of the share price of the stocks. So which will negatively affect the overall performance of the stock market, because the consumers, the buyers, have cut on their spending, and they are not spending that much because of the inflation. They are saving their income or investment. Now the second thing may be unemployment. Yes, when unemployment rate is on a rise, it means spending, that most of the people are not spending their money both as the same as this one, because unemployment means that uh, there are no jobs in a certain countries. There are not enough businesses or not enough jobs are created in that country, which results in unemployment, and people are remain jobless, which would result that most of the people, not many but most of the people, would be homeless. They would not be provided with foods. They cannot spend much of their money that they have saved. So this also results in not buying of stocks, which results in the decrease of the stock, the share price, the share price, and which overall affects the overall performance of the stock market, because both in this case as well, the the consumer do not spend their money, and they try to focus on saving more money to pass inflation until they get a new job. So both of these are kind of related to each other. Now the third thing might be interest rates. Yes, interest rates. Now when interest rate, I might spell it right. Yes. Now when interest rates are rising, the consumers are not spending their money, because more of the money would go to the organization or the government. So because of this case, the dividend stocks are also affected by the interest rates. And now when interest rates are decreased, the consumers do, they generally buy more stocks in the stock market, and which results in the uplift of the prices of the stock market, of the stocks, sorry. And when the interest rates are increased, generally what the consumers do is, they hold on to they maybe hold on to bonds and other things. Or other securities, which results in the decrease of the share price of that stock. So it results in the reduction, or the decrease of the share price of a certain stock. And when the interest rates are decreased, the share price increases, because the consumers invest in the stock market. Dividend paying stocks are also affected by this the mostly. Now the fourth thing which we can say is economic growth. Well, the stock market mainly depends upon the economic growth of the company. Now that growth may be of any company, mostly based on import and export company, and other companies as well, not just these companies but also other companies as well. When the economy of the country is rising, more buyers, it would attract more buyers into that country to invest their money and to further strengthen the economy of that country. So if the economy is good and it is rising, the the revenue of the certain country is rising, what what it would result in is that more investors or more people would invest in the stock market. More people, more buyers, more investors would buy or invest in the stock market, which results in the uplift of the share price. The share price would increase with this. So if the economy is good and its masses are happy with it and they are not unemployed, or inflation also moderate, not inflation is not on the rise as well, and interest rates are moderate, so the economy would be good and more people would more consumers would invest more in the stock market, which results in the bullish market of the stock market. And if the economy is bad and not going well, and which we call deficit, I think uh, if it's running in deficit, so the stock market, it would negatively affect the performance of the stock market. So the fifth thing might be currency. Currency also affects the stock market as well. I will be explaining this in the later videos as well, in the future videos of mine as well. So for now, let's take a quick look of how it affects the economy of the performance of the stock market. Now, generally, the main currency in the world is the US dollar. US dollar is the main currency in the whole world. So if the US dollar is strengthened, it strengthens, so it will decrease in the emerging markets. It would decrease the share price of most of the stocks. So because the currency has increased, the US dollar has increased, people have more purchasing power in the stock markets, in the stock exchanges of other countries, might be of this of its own country as well. Because when currency increases, what it shows that it can with more US dollar, you can buy more stocks. When the price of the US dollars increases and the currency of other countries decreases, you can buy more stocks with US dollars as compared to the currency of other stock. Because the US dollars is strengthened, it shows that it is rising and you can buy more stocks with that currency as well. Besides this, I'm briefly explaining this. I will be explaining this in detail in the future videos, so stay tuned. Now, out of these five things, what I think is, this one is the main thing that can affect the overall performance of the stock market. With this, the stock market mainly depends upon this, because this relies heavy uh, um, this relies heavy on the overall performance. The overall performance of the stock market relies heavily on this one factor. If this is great, if this is good, running well, so the overall performance would be great. If this is not great, then the stock markets cannot run well. And that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.